whole generation of how people experience financial products, financial services is going to be drastically different over the next couple of decades. It's going to be obviously much more digital. It's going to be much more personalized. I don't think our vision is ever completely realized because we want to be fundamentally enabling our customers to create better banking products and services. And that will always change.
Alrighty, hello everyone, and welcome to the Deal Maker Show. So super excited about the guest that we have today. Obviously, a guest that has been there, has done it, has been everywhere around the world. I mean, it's really remarkable his journey, and I think that the story that he has to share with us today is going to be super inspiring for me, for you. That you're watching, listening, and I can't wait. And I don't want to make you guys wait any longer. So without further ado, let's welcome our Eugene Danilkis. Welcome to the show.
Thanks very much for having me. It's a pleasure to be here.
So, originally born in Ukraine, but obviously, time in Ukraine for you and for the family didn't last long. So, tell us, how was life growing up?
Yeah, so I was born in Ukraine. It was still part of the Soviet Union. My parents decided to leave when I was just about 7 years old. It was a bit weird. We were learning English. I had no idea why we were starting to learn English because I was still learning to speak basic Russian. And then we decided, right, we're leaving. Took a train out, and I lived in Italy for 6 months before then flying over to Canada. And I ended up, moving to Canada. And then I understood why I was learning English because now I'm surrounded by a bunch of kids and trying to keep up with them in terms of picking up a new language and everything. And grew up then and spent most of pretty much my early days and until I growing up in Vancouver.
So, then let's talk about Vancouver. I mean, how was that? Because you went there at what age? You were like about 7 years old, or how old
Yeah, I
were
was
you?
7 years old when I moved there. Yeah.
Was it like a big culture shock for you and for the family?
I think the language and the culture was quite difficult, right? I mean, life is always kind of difficult as a kid, of course, but I think especially when you're just trying to pick up a language, you have this really strong accent, you don't understand what all the other kids are saying, what the teachers are saying. So I think that made everything kind of a little bit more challenging, of course, but also kind of really motivated me to learn really quickly. Obviously, try to pick up a language as much as I could, really highly motivated. But also I think made me kind of more motivated to learn, I would say, right? Because I kind of self-motivated because I saw the benefit of learning things and learning things quickly just to kind of fit in and be able to survive really.
Would you say that for you, seeing your parents as well going through the change and building a new life, there in Canada, perhaps inspired you, in the direction of perhaps being an entrepreneur and being okay with dealing with uncertainty? I mean, was that something that perhaps shaped that entrepreneurial bug a little bit for you?
I think so. I think it made me more willing to take some risks and know I know the big risks that my parents took and in moving over and how challenging it was for them. And even as an entrepreneur, we talk about taking risks as an entrepreneur, but even then I know that the risks I was taking were really nothing, and the downside in the worst case of me failing as an entrepreneur were still going to be trivial compared to the risks that my parents were taking. So I think that always gave me a bit of a different perspective on risks because I knew what really difficult was like, and I knew that actually pretty much given almost the luxury that I had of growing up in Canada, that my worst case was not going to be anywhere as challenging as my parents' situation. So I think that gave me a lot of perspective on that.
And why do you think that a lot of people that are originally from Ukraine or I mean, that technical side, I mean, that engineering mindset, I mean, why is that the case?
It's a big part of the education there. It's just a really big focus on that. It's a huge discipline. I mean, my dad was continuously proud of his engineering background, his strength in math. He was always really pushing me, encouraging me to be really strong in those disciplines because they're always really considered really important disciplines for everyone who was growing up. I think in the Soviet Union. And so I think that just gets passed along, and so it kind of falls out. All these, engineering, computer science, mathematics, that sort of elements were really important. And I think when you grow up in that, then you sort of pass it on to your kids, and it becomes kind of important and part of the education. And you ended up sort of thriving in that. I always was really good in math. I was good at computer science, and I think that's just because I don't think I was particularly smarter. I think it's just because my parents were really encouraging me and supporting me in that and helping me kind of go above beyond, and that gave me like also a level of confidence because I could just see like, wow, I'm really good at this, but I was good at it because I had support of others who saw the importance in that.
Got it. And in your case, I mean, that definitely got you into computer science. You went to college there in Canada, and
Yeah.
essentially, all of a sudden, you see yourself writing software that is going to be used in space. So, how cool is that?
Yeah, that was really cool. I was obviously a big science fiction fan, reading lots of Isaac Asimov, watching Star Trek, that kind of stuff, as most people who do computer science are. And then I finished my studies and I applied for a couple of jobs. One was like some database job at a supermarket chain, which I didn't get, and the other one was working for a company that does software development for satellites and for NASA through the Canadian Space Agency, and that was the job I did get. So really happy that the other one rejected me because otherwise there's a different alternative universe where I'm working in a supermarket focusing on databases. So thankfully didn't get that job.
Yeah.
Um,
And why did you decide to go and do your masters? I mean, what was that trigger for you?
yeah, so I mean, I think it was a matter of passion. I was so passionate about actually my first job and my first project, the one that I was got to work on software that was up in space. And when I went into kind of maintenance, I just didn't see any other projects that kind of excited me as much as that. So I was almost kind of spoiled with that. And so I kind of wanted to relight that spark in a sense. So I kind of thought that maybe a little bit of a fresh start of doing a master's would be an opportunity to do so. But I think there was a second part, which was the fact that I wanted to do the master's in the U.S. in Carnegie Mellon in Pittsburgh, and I think I also wanted to really kind of it was a bit of that start of the entrepreneurial journey of kind of venturing out on my own in a sense of like I grew up in Vancouver, I went to school there, my parents were always nearby, and moving to the US was this really big thing for me because I'm like I'm really going to be on my own, I'm going to start kind of from scratch in a way, kind of build up a new social circle, see where my career takes me from there. So I think it was a little bit of that kind of entrepreneurial, I want to try to build something sort of from scratch for myself, combined with hopefully finding something that I was really passionate about as well.
I mean, obviously, that was the beginning of a lot of moving because, after that it
Yeah.
was Portugal, then it was Germany, Amsterdam. So you name it. So I guess obviously the masters was what catapulted you to end up to being in Portugal doing certain projects, and eventually this is what got you into incubating the idea of your baby of your company. No, so what was that process like? And what were you doing first and foremost in Portugal, and then how did the idea of really bringing this company to life, how did that come about?
Yeah, so the way that it worked over there was so I started the master's in Carnegie Mellon in Pittsburgh, and there was an opportunity to go spend a part of the program in Portugal because they were effectively taking the curriculum and copying it over to Portugal. So again, the excitement of going somewhere new, exploring a new land, living in a beautiful country, I couldn't say no to that. So I took the opportunity, of course. And in some sense, it was a bit lucky because the program was set up that we were focusing half our time on like a capstone project, and our corporate sponsor for a capstone project was in the banking software space. Already at this time, me and my eventual co-founder were kind of looking for something that we could take as an entrepreneurial venture because we had that kind of itch. And then once we started to get into this project and started to understand the world of finance, understand the world of banking, understand the role of technology in that, we got really excited about that. And we saw a big opportunity of the technology side. We saw the opportunity of the impact, and it felt like one of those things that is a mega trend and a mega wave that we had a chance to kind of ride on. And so as we got into it, we said this is something that we can get really excited on, that we want to try to build effectively.
Very cool. So then what was the triggering point that really pushed you guys over the edge, and where you really got, okay, like we really got to do this, and Mambo is going to become a reality?
So the big step actually was that really enabled it. I think was actually for myself was the decision to go do the masters, because that was the tougher one, because that was the decision of, okay, I'm quitting my job, I'm getting rid of all my furniture, I'm leaving my friends, I'm leaving my salary, etc., and I'm taking two suitcases and going to the US. So that's the kind of the okay, I'm gonna go start on a new adventure. From there, the adventure of instead of I'm going to go get a job somewhere using my master's degree, of you know what, I'm actually going to go try to see if I can create a business and out of this. That was sort of the easier step at that point because I'm there with two suitcases. I know that my fallback is I can find some great jobs out of this. I have a a good degree and good education and everything. So I don't really see too much of a downside in some sense. So it felt like an adventure of something to explore. In the worst case, I waste some of my time, but I figure I'd learn so much anyway. And so it felt like really there's just all upside, basically, in some sense. So it was slightly of a bit of a naive view on it, but it was also, like I said, made easier by the fact that I've already, I guess, abandoned my safe job. I already left my apartment and everything else. I made the decision to, you know what, let's go pursue this venture. Let's see if we can make it happen. Let's see if we can build a business. I made it a relatively easy move, actually, at that point.
So what were some of the early days like of Mambu?
Yeah, so the first year was just figuring out a little bit of what we really wanted to build because we had the concept in our head, but then we started to really get into the nitty gritty of building, designing what the technology would look like, thinking a little bit about what the possible markets would be, and we were fully in it, but we also needed to pay the bills, we needed to pay rent. So I spent half that year also working, doing some consultancy work, doing some other software development, and the big thing for that year was, well, can we raise some funds? Can someone else believe in this for us to make a real business out of it? Because we can only take it so far with just the two of us. And so we started to build the product. We built the first prototype, and once at the end of that year, we got an angel investor to support us. That was really the big kind of wow moment because then became very real, right? Because if we couldn't make it happen, then I'd have to find something else. But at that point, we have some money. We have an angel investor that believes in us. We have a prototype. We know that we can launch a product, an MVP, within the next 6-9 months. And now this is becoming real. It's becoming business. We're going to be hiring people and everything. And so that was really the first year of it was kind of exploratory in some sense for that first year. And at the end of that year, it became very real, basically.
Got it. I mean, it obviously took a little bit of time because you guys were bootstrapping this and doing some consulting jobs at the beginning in order to obviously pay the bills. But
Yeah.
in this case, just so that we end up, like the people that are listening get a good sense of what ended up Mambu and what is the business model. I mean, what's the business model of Mambu so that people get it?
Yeah, so it's a software as a service platform for banking. The best way to think of it, if you're not from the space, it's a little bit like what Salesforce is to CRM. So Mambo is to the financial services space. So we're effectively kind of the back office system where banks, lenders, fintechs, and others use our platform to design and service how their products work. So if you think about designing, I don't know, a loan for a small business, how the loan should behave, what are going to be the repayment terms, keeping track of all transactions, interest, accounting, all the other back end parts of how financial products behave, provided in a software as a service way, and then enabling our customers to use the whole entire ecosystem of fintech and build great customer experiences and build great products and technology on top of it is fundamentally our proposition.
Got it. So then, what was that process like juggling? I mean, juggling the consulting jobs with really, like pushing the business forward. I mean, was that painful?
No, not really. For the first year, so it was okay because there was pretty much no expectations except our own. Right, we didn't have customers, we didn't have investors. It's just a matter of
Yeah.
how much time can we dedicate, or how little time can we dedicate on other projects, so we can spend all of our time building Mambo, basically. So it wasn't that challenging, and because we were able to make enough money out of that and then get some angel investment pretty early on, we were able to really focus on Mambo relatively quickly. I would say within that first year and really make it our full-time focus of and attention.
And you guys launched in 2011, but things really took a turning point in 2015. So what happened there?
Yeah, so we got to our first product pretty quickly, I would say. It was probably about a year or so from when we kind of laid down the first line of code to when we had our first customer live on the product and platform. which is not so trivial because it's a banking product. It's relatively sophisticated. It's kind of mission critical system. So even though the capabilities were pretty small, it was still quite a bit of an MVP build. Um, but we were a really small team. I mean, myself and my co-founders were focusing on building the product and technology, doing everything with our customers. We had a small team of engineers supporting us, but it was very, very hands-on the first few years. And our customers were finding us mostly organically. We didn't have much going on in the way of sales and marketing, but they were kind of finding us online through word of mouth. But what happened was a lot of our customers at that time tended to be smaller organizations. They tended to be in emerging markets. There were some nonprofits and microfinance organizations, which was great as early customers and adopters. And we felt like we were making a really strong and positive impact and developing the product quite a bit during that time. But at the same time, it didn't have the kind of commercial traction that we would saw that would be able to make us to create a sustainable business. Never mind execute the vision for the product that we had, because there's so many things that we wanted to build, but we didn't have the funds to do so. There's also quite a bit to support in terms of just the costs of running the business. So it was great to see the really rapid adoption by a lot of small organizations. So that was really exciting and stimulating, and they had really positive feedback. And so it was always kind of encouraging to keep going. And as a product person, I always had great feedback and great ideas. But it was always a bit a challenge on the commercial side of it to see, they love the product, they love what we're doing, but is this enough to make a real meaningful business out of it? And that started to probably change around 2014 or so, 2015.
Got it. And obviously, from 2011 when you launched up until 2015, there was, I mean, you were in the desert. I mean, you were considering early acquisitions. Obviously, you were not happy with, where you were at that point. So, what would you say kept you going?
I think it was the customers in some sense, because we just always kept getting really positive feedback from customers, even if they didn't have the ability to pay. We always had more and more customers contacting us. They were happy with the product and technology. It always felt like there was enough momentum behind that, and we could always see sort of more and more things that we could do. So I think that's the part that kind of kept us going, even though the commercially it was a challenge in the first few years. We could just feel like we're on the right track. We just need to sort of survive and get through long enough for it to really break through, because the feedback is there. There's more and more positive feedback. Everything is pointing in the direction that we're right. The question is, how long will it take? We didn't know if we talk about it, the turning points being around 2014, 15, but back then, what if it was another 5 years? What if this year would have been the turning point? Could we have, survived and gone through another 5 years of the challenge in the first 5 years, right? It was a bit of that kind of endurance test, but we somehow could feel like the trends in the market and the customer feedback were, encouraging us kind of as our fan base effectively to keep going.
Yeah, because I think that when you're in the desert, and experiencing those types of challenges, I think that also it impacts the culture to a certain degree, no? So how did you guys manage to really keep it together?
I think we as a team, we just loved working together as well. So you know what, even though it's if you like the people that you're working with and you're supportive of each other, then it makes the journey kind of endurable and sort of enjoyable, in the sense of, because you're going through the same challenges together, you're forming close camaraderies, you're figuring out things as a team. And I think that element of the fact that we liked each other, we liked getting along together, we like spending time together outside of the office, that really helped, I think, because we just felt like, we didn't want to let each other down. We were there to support each other, and I think that really helped a lot in those days. And it wasn't just for like the close founding team as well. For at some point, I think it was about 4 months or so, where we had to ask. We as the founders pretty much stopped taking salary altogether for about 6 months or so, and then we asked pretty much the whole entire company to take, I think, a 50% or so roughly salary cut for quite a while, as we were closing a bridge fundraising round. And there was almost no hesitation from everyone in the company. I think it was probably about 25 people or so to sign up for that. Nobody quit. Everyone said perfectly was fine to take the cut for a while, even though they didn't know if they would ever see the money at the end of it or if we would survive. And I think that kind of, again, not letting each other down and that camaraderie as a team, I think also really encouraged us and motivated us during those early years.
Because also, how much capital have you guys raised to date, Eugene?
Today we've raised over 150 million euros.
Over 150 million euros. And how has it been the fundraising journey? I mean, I'm sure that it has gotten a little bit easier, especially after 2015. But how has it been that progression and also the expectations that you've come across as you were going out there and doing the roadshow?
Yeah, so I mean, in the very beginning, the very, very early fundraising was basically finding, an angel investor or early companies that believed in us as a team and believed in the larger market trends. It was pretty much just a bet on that's where they think the market's going to go, and they believe on us as a team to be able to execute and figure things out along the way. It wasn't really much more than that. Of course, we prepared lots of business plans and projections, but looking back, it was just simply a bet on those two things. So it's good that that we were able to kind of get the confidence of the early investors, because that's pretty much all they were betting on was basically was us and the potential of a market. And then during, once we started to get initial customer traction and feedback, then it started to change. Then it was really a question of how big of a market are you really addressing and how exciting is it? So in the early years, when it was just lending companies, people were trying to, we kept talking about the bigger market opportunity in banking, etc. And we believed that it would still change, but all we had as customers and proof points was a much smaller market of a certain type of lenders. So the challenge was, you have enough proof points, there's enough happy customers, but now it's investors betting on the fact that the market is much bigger than the market that we've so far managed to serve effectively. And I think that was pretty common with a bigger and bigger market over time as we started to work with different types of organizations, more products that started to evolve. But that was continuing kind of the story up until the most recent fundraising rounds, where it was really becoming now a question of how quickly can you capture the market, because everyone now really sees what the really big market opportunities are. They can see how banks are thinking about cloud and how it becomes so strategically important. Now it becomes a matter of, okay, now we really see what the size of the prize is, and how far along you are on the track. The question becomes now question of execution and focus and prioritization to capture the biggest part of that prize as possible.
And obviously, as you were progressing, raising more money, growing the business, I'm sure that your role as well as the co-founder and CEO has transformed and evolved and also progressed. So how has it been, like going through all these different phases within the life cycle of the journey of the business, for you as the CEO of the company? How has that changed?
Yeah, it changes drastically every single year. And, if I was looking back and kind of giving some advice to my former self, I would probably ask myself to, like, as I start every year, to like write down my own job profile and like discuss that with my co-founders or with my board or with someone else. Like, what is my job for this year? I think that's actually a really beneficial exercise to do, which I never did. And you kind of carry some assumptions about it because you just kind of grow into it year by year. But I think because the nature of the role changes so much, and the nature of the team and the company, it's actually a worthwhile exercise. And I think would have helped me to uh, be more clear on what I should focus on and get that kind of alignment between myself and the board, and for myself to get my own kind of confidence of, like, all right, these are the three, four most important things I need to focus on. The rest of it, I need to manage, of course, because there's still business as usual and stuff comes up. But this is what I really, really need to focus on. And I think if I did that in the past, especially in the early years when things changed so much, that would have probably given me myself a bit more clarity, because I felt like every year I was both figuring out the business, but also figuring out myself, like, am I doing a good job? And that's hard to say because I need to define what my job is to know if I'm doing a good job in that first.
So there's probably a lot of people that are watching and listening, and wondering board, for example, dynamics and things like that. And I guess in your case, and to what you were saying on alignment with the board, what does it look like when there's full alignment, between the management team and the board of directors of the company?
Well, for us, up until so far, I've had my relationship with the board has been very much an advisory nature in the sense of, it's almost a sparring partner to myself. I feel like I have multiple advisors that I come to, and it's very much up to me to present, what are the topics on my mind, what are the challenges, what are our plans, gather feedback for that. Some of it mostly some of it constructive feedback, some of it more of a sounding board. So I think my relationship has been very much with the board of, working with them as an advisory board, actually, for the most part. Um, I think what's been beneficial has been actually laying out, the really key objectives with the board for the year, and for myself to actually, like I said before, to be able to clearly say this is what I want us to achieve as a business for the next couple of years, and to achieve that, these are the most important things for this year that we should be focusing on, which also means there's a few other things that we might not be focusing on so importantly. And some of those are almost implicit in startups because, for instance, a lot of startups don't focus on profitability. That's kind of obviously very implicit and everyone kind of takes it for granted. But it actually is beneficial if you make a lot of those implicit things explicit, as in growth is our number one priority. Well, what does that mean? Does that mean growth at any cost? Well, maybe not completely. Maybe there's a certain threshold where you're not comfortable spending that amount of cash to achieve that amount of growth. So I think defining a lot of those things with the board also makes it a lot easier in some sense as a CEO to execute because you know what to focus on and what not to focus on, but also allows you to work with them better as advisors along that journey.
And imagine, Eugene, that you go to sleep tonight and you wake up in a world where the mission of Mambu is fully realized. What does that world look like?
Whew, good question. I think quite a few different things. I mean, we know when we set out basically to build Mambo, we were in a world where there was about two and a half thousand, 2.5 billion people that didn't have access to banking products and banking services. And we saw that as an exciting market, but in general, we thought, well, the whole generation of how people experience financial products, financial services, is going to be drastically different over the next couple of decades. It's going to be obviously much more digital. It's going to be much more personalized. It's going to be much more seamless and easy to experience. And in a world where I don't think our vision is ever completely realized because we want to be fundamentally enabling our customers to create better banking products and services. And that will always change because what is better banking today will be different in 5 years and different in 10 years. And so I want to make sure that our customers are still seeing us, in 10 years or 20 years, even when we have billions of end customers serviced through our customers on the platform, and our customers are still feeling like we're a partner that helps them to rapidly evolve with whatever is actually changing out in the world. Because the only thing that we know in all of technology trends is that the pace of change is accelerating. And I think only right now are financial services companies starting to feel that, and we want to help make sure they're able to keep up with that pace of change.
I love it. I love it. So you were alluding to this earlier, that you could have, if you could have a chat with your younger self, because it's typically funny. One of the questions that I always ask is, what would you tell your younger self if you could go back in time? So you actually answer that, which is great. So I guess expanding a little bit more into that, and if you had the opportunity of having a chat with your younger self, maybe that Eugene that was thinking about starting the business. I mean, you were alluding to it that you would kind of like give yourself a little more guidance and to showcase what needs to be done because every year is changing. So if you had, for example, that opportunity of telling yourself what you would have done from seed to Series A, and then from Series A to Series B and Series B and beyond, what would you tell yourself in order to really be effective as the co-founder and CEO of Mambu?
Um, I think I would say just to be a bit more honest with myself in terms of what we're trying to achieve. So that C to Series A, especially in our space where we're building, an enterprise, vertical, mission critical software platform, we sort of presented ourselves to customers and to investors as I won't say a finished product, but a complete product, right? And I think we would have been more beneficial if we kind of went into it in the early years and said, to the market and to our investors of, for the next 3 years, we're going to co-build our platform and product with our customers. We're not going to let them build it for us. They're not going to define the features and everything. We're going to still stick to our product vision and our SaaS principles, but we're going to go find customers that are forward thinking, that want to co-develop with us. Yes, they'll pay us some amount of money for that service, but we're not focusing on revenue growth. We're focusing on customers that believe on the vision and will help us co-develop the platform. Because that's what we ended up really doing the first 3 years, but we did that sort of implicitly, and as a result, we were really focused on our revenue growth and other factors. But those, in retrospect, weren't really important. It really didn't matter if we were growing 200 or 400% or 75% year on year for the first 3 years. All that mattered was how strong of a product and platform we're building, and how closely aligned was it to our target customer segments and personas. And so I think we sort of fell into, I don't know if it was in the trap or just the nature of feeling like, well, we need to show revenue growth, we need to show velocity to investors and all that. But actually, if we were honest about what we really need to achieve, we would have probably faced it differently. Maybe we would have found different investors, or maybe the same investors. Maybe we would have found different customers. I think that would have been more honest of what our real objectives during that midterm would have been, and we might have then changed a little bit of our approach as well. And that comes back to, like I said, defining a little bit of what is the sort of the strategy, but what is really the key objectives within that time. And I didn't really define that in the beginning. I sort of thought, okay, well, we're the CEO, we're building a startup, we have to show revenue growth. All these startups on fintech or in TechCrunch and everywhere else are talking about their 200, 300% AR growth year on year. We need to be a company like that. So it was almost kind of the sort of the default path. If I stood back and stepped a step back a little bit and thought what's actually the right thing for us strategically, it probably wouldn't have been that. It would have been a slightly different path, but I didn't know that at the time.
Got it. Very, very profound, Eugene. So for the people that are listening, what is the best way for them to reach out and say hi?
Best way to reach out to me is just you can always find me on LinkedIn under Eugene Danilkis, and then just send me a message on there.
Amazing. Well, Eugene, thank you so much for being on the Deal Maker Show today.
It was a pleasure. Great questions. It was a pleasure to chat.